But can you hear me? Okay. Okay. So Gokul Chandan, I didn't receive any chart from your side. So I'm really expecting some chart. Even if you don't have any queries, just let me see your charts. Let me see your work, your analysis. What are you thinking on some charts, so that I'll get the view which way you are going on. All right. So if you don't have any queries, any questions, still show me some charts. Maybe 2-3 charts on each session. Okay, I think we are just this many people today. Okay, so since today my topic was volatility, so I got a chart from Bhatt, so I think we can start with this chart itself to talk about trading about the volatile market. Even though this chart will be one of the this chart should be one of the example of the topic I decided to talk about today. So let me just wait for 2 more minutes if Gaurav is coming in. Just wait for Gaurav. I don't think he's there. When is the last scene? Oh, I don't think he's in there. Okay, anyhow, I don't know. I don't watch movies. So if you like, you can just go through these movies. Gaurav sent it to me. Bazaar something. So check it out. So Gaurav is one of my. He's the only gold member actually so far. Who a sustained gold member. So gold member is once upon a time I had one channel. This is this gold member channel for the new people. I'm saying for Gokul and Chandan especially. So people whose startings are very nice, up to the mark. I used to include them in this channel. So there were around 6 members only. Out of I think at that time there were around 100 plus members. So 6 members were in this. But finally, this guy he sustained because he was regular. He was disciplined. There were better guys than Gaurav actually. There were a few 2-3 traders who were really better than him, but they were not consistent. So one of the criteria to be in this gold member is you will have to be consistent in your work. So I had to delete them. So finally, this guy is the person who really sustained for last, I think, almost a year. Almost a year. So he had some his new. I mean, I should not be saying new thing, but he has some his way of looking the market with the price action thing. Some different way he was tracking it. So he used to update me those things. And this. Okay. So let's start it. So volatility. Now for last, I have around I think 10 recordings pending. So it's not edited yet. That's the only thing. So once I just do the edit and I'll have to upload all those trades. So those trades are based on my live trades for last 2 weeks, based on and all of them are the non-volatile breakout momentums. All of them except one which is in Tata Steel. That's a volatile momentum trade. So that should be a good one for you guys. Now trading the volatile market, why I have chosen to talk about this topic, because it's been a while actually. I didn't share any charts with you about this volatile market trading and all, as well as this should be a new topic for the beginners, because on this topic you already talked about in a few Sunday sessions. But for the new people, I think there is no topic on this given in the course part videos. It's only in the Sunday sessions. So this should be helpful for you guys. Now in the market, there are two different kind of market we trade, right? One is either it's a volatile market or it's a non-volatile market. Now, when it's a non-volatile market, so that's very much preferable to trade. I mean, if you have two charts, a chart is showing you very much volatility, another chart is very much non-volatile, then I would say go for the non-volatile chart and leave that volatile chart for a while. But see, again, that depends on your trading style, right? So you should be testing both the flavors. You should be keeping your eye on both the charts, and you should be practicing both the themes. Because if you don't understand, if you don't know much about how the volatility works, then this will be a problem for you to work with a non-volatile market. So if, like for me, I'm pretty much comfortable with the non-volatile momentum. I like it. So most of my trades are based on that. So volatile momentum, I like it, but that's not the first choice, right? But it doesn't mean that I don't track volatile market. And when there is a like Tata Steel, that's a great opportunity for a, because in that Tata Steel trade, I found somehow both the things, volatility as well as a non-volatile condition some way. So but anyway, I mean, in terms of volatility, if I explain you Tata Steel, it's in the recordings. So it fulfills all the criterias, right? But again, I mean, for the intraday trades, it's always better if you go for the non-volatile momentum, because in non-volatile momentum, you get the move very fast. And in intraday, we need that. Even in volatile momentum as well, you have the move. But with using a volatile momentum, you can't really catch up with the breakout kind of momentums. So anyhow, we'll come to those topics in depth in here. Sorry. Now, you can note down if you have any queries when I'm explaining these things, and then you can just send it to me in the Telegram. We can have a discussion on this afterwards, or you can keep sending me those queries in the Telegram chat window. Now, when it's a, how can I do this? Okay, so we need edit pen, I think. And the thing goes vice versa, actually. So if someone is liking this volatile momentum very much, and he doesn't understand non-volatility, then again, that's a problem for trading the volatility itself, because he won't understand the transformations. Now, like here, Bart says, we have a downtrend, and then gradually price is now trading above change of trend layer. So change of trend in the sense the last lower high, he's saying. And can I go for a price is trading above the COT but not outside the downtrend channel? So it's still in the channel, even though it's trading above this. Can I go long on flip support? So he's asking if he can go long here for a target of hopefully this channel top. So there are a few things apart from this volatility, basically. So volatility, I'll come to this part a bit later. So let me just clear a few basic part here, a few basic mistakes. That is, this channel is not right, actually. The way you have drawn this channel, this is not a right way of drawing these channels. When you draw a channel, then or a trend line maybe, then try to touch more as far as possible. So your line should be going through this. All right. Like how you did this one is a right one. You try to touch most of the order flows or most of the order flow areas. So that's the right way to do it. If you can touch this one also, that would be better. So most of the time it won't be accurate. Most of the time it won't be touching all the points. That will happen. But even if you can touch the key turn points, even that's enough. Because obviously you are not, if you're selling it, you are not going to sell right at the top. that's not gonna be happening. Even if you're selling over there, your stop loss will be much higher than that layer, giving a space for the false break, right? So even if it is a little bit up and down, that's okay. But like this is out of the picture actually, this line. All right, so that's first one. Secondly, about change of trend. Change of trend is not, this won't be considered as a last lower high just because this has broken down. Are you saying, okay, yeah, this is the change of trend you are saying, all right. So just because it has broken this low, you see, if something is going this way, where you have so many major swings, so there are good volatility, right? The buyer push the market a lot higher spaces, and then sell off comes in. So that's a push and a selling push. That's a push and a selling push. And suddenly, if this thing happens, and then this thing happens, we really can't say that this trend is over. Because if you compare this one, the sell-off of a strength, this is much more higher. This should not be considered as such sell-off strength as compared to this sell-off strength. So when you see this type of things, this type of volatility in the market, then the general thing, we should be expecting a higher pushback. You know why this mistake happens? Because we are not really understanding the structure of the market. The structure of the market is, it falls down, it retraces back around 80%, and falls back, retraces around 50% lost swings. So you have higher pushes, higher pullbacks, which is creating the market very much volatile. And that's why we are seeing a volatile market. And then it's in here. Then what should be the expectation? Another volatility, isn't it? So if that doesn't happen yet, that didn't happen yet, another leg of volatility, it just moved up and come down. This thing, just this pushback up and a breakout of that layer doesn't really throw this overall downtrend out of the picture. To go out of the picture, I mean, to throw this downtrend out of the picture, there will have to be a breakout of a key layer, which really matters for this downtrend. And where is the key layer? That is in there, this layer. This is where we see around this layer, the sellers are really aggressive, attacking the market time and again. And when the market is able to go through this, then only we can say, okay, now since the market is able, the price is able to go through this key layer of resistance, where the real sellers are coming in all the time, really, and you're facing a strong, a major selling strength every time the price travels that area. And when you go above that level, then only we can say, okay, this trend is over now. I can understand. I mean, by the time you can realize here, we have already missed a lot of move, but that's okay. Not necessarily you will be getting the move like this all the time. Sometimes you'll be getting move like this, and you're getting out of here. But when you see such volatility in a stock and such major sell-off strength in a stock, then you will have to give that stock some time to show you the strength of the buying side, and just not a small selling strength. These don't mean actually, these don't mean anything actually. This can be considered in a non-volatile structure, because what happens in a non-volatile structure, you don't get a swing at all. Now where you are not getting swing at all, at that point of time, if you're getting this swing, now this swing matters. I mean, this is the first time the buyers were able to raise their hand for a little bit for the first time. So even this is a strength from the countered side in such kind of market. But in such kind of market where we already have massive selling strength, this is nothing in front of them, isn't it? So choosing the change of trend layer is very important, and this is not a right change of trend layer. And we should be going for this. So we should not be going like in the foundation course how we do the last lower high or the last lower low is your change of trend layer. That's just a beginning thing, and later on you will have to understand the price action context, and then you will have to decide whether the last higher low or last higher lower high should be considered as a change of trend layer or no. Because the change of trend layer ultimately means the change of order flows. So wherever in the chart you see there is a change of order flow, existing order flow, then only you can decide, okay, now the trend is going to change. Now, this breakout is not really gonna change the order flow happening here, because in that way you will see this thing happened as well, this thing happened as well. Every time there was a pushback, there was a pushback, there was a pushback, similar way. But in a broader picture, even here there was a pushback. But in a broader picture, these are the key resistances. This is where the market is really falling, the volatility. All right. Now, having said that, for a small momentum using a lower time frames, if you want to go ahead for a small counter trade with this, yeah, you can do that. That's possible. If you want to go it, because in a lower time frames, in a 5 minutes, this will be a key resistance. So a breakout pullback continuation, that's possible. But that's a very much narrow range you are trading, because if I draw the line correctly, then we are already touching this range. That's one thing. And once I talk about the volatility part, then you'll understand this thing, why you are not supposed to buy here even in a 5 minute time frames. That thing will be more clear to you. Now, any queries on this thing I discussed? But this change of trend layer I talked about. Okay. Now, in terms of volatility, whenever you see a market is pretty much volatile, you have the buyers and selling strength coming in equally, almost equally. Like, what is the condition in here? You have a retracement 80%, you have a retracement 50%, you have a retracement 90%, you have a retracement again around 90%. You know, so the buying is coming in a strength with a very strong manner, as well as the selling is also coming with a strong manner, even though you're making lower low and lower high. So this is a very important thing, because most of the people, they are like, okay, you're making lower lower high, lower lower high, then it's a downtrend, and so just look for any kind of selling opportunities in this. No, because there are variations in lower lower high. Like, this is one of the variations with a 80 to 90% on average retracement. So when you see this kind of market momentum, this kind of market structure, the first thing you're not supposed to do is trading breakouts. So the first thing, we'll never try to sell the market below the last lower low or breakdown here. We will not try to catch this. We'll not go for this. So we'll not go for this one. We'll not go for trading this last lower low breakdown. We'll not go for trading this last lower low breakdown. Similar way, we're not going to trade this breakdown. All of them will fail if you're trading the breakdown, because market has a tendency of pushing back up for a retracement. So that's one thing. We'll not look for breakdown trades, breakout trades. Breakout trades towards downside. I mean, when it's a downtrend, obviously. Generally, in a non-volatile market, exactly the opposite thing happens. It goes down, goes sideways for a little bit, and then a breakdown. Goes sideways, a little bit, breakdown. Or a little bit of up and breakdown. Because it's a one-way market. The control is in selling side fully. The selling side is fully controlling the market. So in such kind of non-volatile market, we can go for we can go for a existing trend breakdown trades, last lower low, as well as if there is a channel breakout, let's say it's in here, and then there is a channel, we can easily go for a breakdown trade again in this, but not in such conditions, not in such areas. Like here, if you see in a lower time frames as well, you will be seeing is a key support layer, support, and then there is a channel. So even if there is a channel, we'll not go for a breakdown because of the overall structure of the market. That's a volatility in the market. Now, that's one thing. We'll not go for a breakout trade. So what is the other way to trade? That is pullback. Now, in any way, in such kind of market, we'll not go for a breakdown, pullback to the key layer, the flip layer, the last lower low flip layer, and go down. We'll not go for such trade as well. Similarly, here, breakdown, pushback, go for sell. No, Will not do that. Will not do that. Similarly, exactly opposite thing we'll do in a non-volatile market. When we see a market is very much non-volatile, then in lower time frames we attack every kind of support or resistance to go to get into that trend. So if there is a minor swing even in a non-volatile market, even we'll attack that flip layer. Even we do this in 1 minute time frames. That's very I mean that's a minimum time frame, and in 1 minute time frame even you don't get the much of a good breakout momentum below the last lower low even, but it works out just because the control is in that one side and the other side is not controlling the market, so you can play it aggressively. Now why you want doing it in this volatile market? Because the market has a tendency of a higher pushbacks. So if there is a breakdown of last lower low, there is a good tendency that it will penetrate that key layer and push back up for a retracement, since it is happening for 80 to 90%. Again, for a retracement, it will push back up. So when it has a tendency of pushing back up as a corrective swing, then your stop loss will be getting hit every time you go for this. All right, so that's second part. Third part, then how do we take the entry? We'll try to take entry in deeper pullbacks. Why deeper pullbacks? Because the price is showing us deeper pullbacks every time it falls below the last lower low. Falls below last lower low, that's a deeper pullback. And I break out, I mean lower low, lower low, lower low, deeper pullback and lower high. Falls below lower low, deeper pullback and lower high. Falls below lower low, then what should be expected? Should we go short here? No, because if we short here, we don't see the pullback is deeper. We want to see a deeper pullback as it was happening in here, 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 and here. So we are expecting price to give us a deeper pullback and go short. Now, where should be the deeper pullback? The best way to go ahead with the shorting is a change of trend layer. Now, in this chart, the change of trend layer, because if the price will go to the change of trend layer, it's a deeper pullback, obviously, to travel that much area. But most of the time, it doesn't really happen. It doesn't, because if it is making lower low, lower high, lower low, lower high, a volatile lower low, lower high, so obviously it's not testing the last lower high. That's when you're getting a lower low, lower high. So there should be two chances we should be taking to get into a volatile trend. One is go short on a deeper key layer. Second is go short on a deeper change of trend layer. All right, and similar thing we do in a non-volatile structure as well. So if something is falling this way, this way, this way, let's say this is a 1 minute time frame chart. So I go short in here, but still this is important. Why I'm not waiting for the market to short here? Because since this is a non-volatile momentum, the price is in momentum. So I don't really want to wait the price to come here and short, because most of the time, if I am waiting for the change of trend layer, I'll be missing the trade because the price is in momentum. So I want to get in as fast as possible. If I hit the stop loss, I'll again get in here, because till the time it's not going above this, the order flow will not be changing. So till the time the order flow is not changing in line with my trade, I want to get in wherever it is possible. So similar thing we can apply in both the scenarios. They are a bit up and down actually, because let's say the exception is, let's say if the price falls here, now you're not supposed to go short here, because if the price travels this much length, then it's no more a non-volatile momentum. It's a volatile momentum now. I mean, you can understand that, right? So when it's pushing back up from here, it's a non-volatility. The buyers are not seeing we're not seeing much buying strength. But if it's pulling from so much down from here, then you can see a buying strength, good buying strength coming in. So volatility is picking up inside this one. So we are no more interested, because we have been trading this in terms of non-volatility in this. Now here, if you want to go short, where we should go short? One way to go short is on this top, where we see the last major swing. And when the price will travel here, this is the change of trend level, as well as we'll be getting a good range of pullback. which is in line with this volatile market. Stop loss should be placed, I would say, above this range if you want to play it big. If you want to say, if you want to play it safe, if you want to play it aggressive, then go ahead with a stop loss here. I mean, above this one. And still, because till the time we are not, because see these areas, these highs are very much nearby. So till the time it can be a major false break and come back down. So till the time we are not falling below this, we are not really expecting a turnaround and everything is bearish yet. So when the stop loss goes very much higher, because now if you shop here, stop loss here, it's very high range you are trading. So in that case, you can go for two trades. One is taking chance in here, other is taking chance in the channel. So we are selling it here, stop loss above this, stop loss based on this high and this high maybe. Secondly, selling a bit, if we hit the stop loss, selling a bit higher, stop loss above this entire range. You can choose any of the method. Both are okay. Both are okay. The idea is till the time we are not going above this, everything is bearish. Now, how to enter, where to enter, what should be your stop loss, that's your preference. So you can go, you can target this one, you can target this 2-1. Okay, so what if the price don't reach over there? Because so far we can see the price didn't reach the last lower high. Even this one doesn't reach. Even this one doesn't reach, isn't it? So in that case, choose a major key level before the last lower high. But choose a major key level which will match up with your deeper pullback. So where it comes. Now, just to give, think about the examples. Let's say we don't see the market from here onwards. Forget this. All right, and we are seeing the market right from here. The selling starts right from here. So 1, impulse move, 2, corrective swing. It shows us what? Volatility when the previous low is broken. Okay. Secondly, goes up, back up, and break down. So from these swings, 1, 2, 3, 4, 5, this is very much clear that, okay, we have a volatile structure right now in whatever it is. What is this? Okay, Bank Nifty. Yeah. So now if the picture is, the structure is clear that we have a volatile structure right now, what should be our mindset? We only trading breakouts in here, lower low breakouts, and we'll have to go short on deeper pullbacks, not short pullbacks. So when the market is in here, now we are waiting for, if we are trading this volatility, then we are waiting for a deeper pullbacks and go short over there. So where you see one way to go short is here, the last lower high, and where do you see the next major key level in this layer, a possible area where we can really go short. So to find it, remember we are in here, okay? We are in here. We don't know what happened afterwards. To find it, we see, okay, we have this high where the price was stuck, coming back down, pinging over that layer, all right? And then, okay, going back, we have some order flows getting around here as well. Somehow this is a high, which was a breakout and pullback around that layer as well, right? So this is the possible key layer you see. So make a zone over there. All right. So you're supposed to go short on this because this is the only major key level you see. You don't see any other major key level around it, right? So one point you can go short is here. Other point you can go short is here. So if it's a last higher low, sorry, lower high formation is going to happen, then the most probable point should be this key layer. And similarly, you should be choosing the other layers as well. So you go short over there, and then there's a breakdown. And now we are in here. Now again, there's a breakdown of the last lower low, and again you're expecting a pullback up, a deeper pullback. So the next possible level should be this one. And now again find some key level where we can be like, here we can't short it because if the market goes in here, this is not a major pushback, and we need a deeper pullback towards this resistance to go short somewhere in between. So where do you see the next layer for this pushback towards the upside to go short? This is the last lower. This is the last lower high. In between, actually, we don't see anything as such. We don't see anything as such over here. So this trade should not, you should not be getting this trade, because the only possible way to go short should be here. And it turned back down right before hitting that. So anyhow, we reached there. Okay. And then again, we are waiting for this pullback. We are not supposed to go short here. Why? Because we are expecting major deeper pullbacks. So this is the best layer to go short. And where should be the next better level to go short below this? It should be this one. I think now we can consider these areas. Yeah, we can consider these areas now. False breaks. So somehow we can see this is the layer where the price is responding back. So that's where you can go ahead with a short position. So in terms of those views, now you're having one more pushback coming in. Now where is the good position to go short? Now I see there is a support. There was a resistance on the same layer. Order flows were there. So this is the line I'm getting. Now if I hit this line, I need to check out whether this becomes a deeper pullback or no around this layer. Yeah, I mean, this was the move. Against this, we'll be moving this much, almost 60, 70% of the deeper pullback. Not bad, we can go ahead. Right, so when this is the view, you are not going to go for a buy, intraday buy, even though there is a major support level, because this is a broader picture. You were in line with the trend. And as well as you have the trend line coming on the same area, even though I don't follow trend lines, but that since the price is responding back from the trend line, so that becomes a price behavioral structure. So we can take that as a consideration. So I use trend line when it's a part of the price behavioral structure. Price behavioral structure means when I really see there is a trend line and the price is really responding for a number of times from there. So it becomes a behavioral structure basically on the chart. So things are matching up. A lot of things are matching up in line. Where should be the stop loss? Now stop loss should be above this, but preferable stop loss should be above this high if you can keep it in a safer side. And what should be the target? Since you are seeing the price is not really sustaining below the last lower low, that's very much clear. It's not sustaining. So your targets should be the low of the last lower low of the trend. So if you're short here, exit here. If you're short here, exit here, because it's not sustaining, right? Short here, this is your target. Exit here. You won't see the volatility working this way a lot of times, because then the price will have a follow through. Well, if the price, you see the price is having follow through after a break of the last lower low, then you keep the target towards downside for the next low. And also, when you see such kind of price action structure, such kind of volatility where you see it's not sustaining on the last lower low, then this is a good chance to go for counter trend trades, right? So if there is let's say we have a very strong key layer coming around here, maybe a weekly support layer, and you see the order flow is not sustaining on the last lower low, bouncing back up. So why not, when the price hits here, go for a counter trend trade, go for a buy, because you have a key layer from a higher time frames, as well as it's not sustaining below the last lower low. So even if it's not sustaining, there is a false break, right? Again, there is a false break. So if you're shorting somewhere here, your target is here. Whenever there is a false break, you have a key layer also coming in. So that's a very good support layer. But don't go against this trend. You go for the buy here. In that case, you can wait for a reversal, because every time you can say there are reversal shadows coming in. So if you're not daring, then you can wait for a reversal bar to show up and then go in for a counter trend trade and exit on the pushback, and wherever the key level comes in the next possible key layer, just exit there and go short there back again. So both the possibility of trades, you can get this kind of market structure, deeper pullbacks as well as counter trend trades. Anything you didn't get from this discussion? But by the time it reaches change of trend, the momentum is more stabilized, where you should not go short. No, it's not really. It's not much stabilized, you can say, because this is a channel. This is a channel kind of a structure. So we are not seeing any momentum as such. If we talk about momentum, then we could talk about momentum this one. That okay, we are seeing some strength. Even we don't see those kind of momentums here. So this is, I'm telling you now, I mean, if you go to 5-minute time frames, this is a trade. In 5-minute time frame, this is a channel, it's a channel breakout. That's a trade. But you can't go against this overall structure. Because if you go for a 5-minute time frames here, even this is a breakout. And this is a breakout momentum. But it failed, overall it failed. I mean, if you're a 1-minute time frame trader and it's like you're trading very fast, then I agree, you can go for this momentum, a small move, get out. But you will have to inline, your chart will have to inline with this one that, okay, I am just getting in to trade this pullback. I'm not expecting a reversal. So just go in, get out. Go in, get out. This is a place where the long-term players are coming in for shorts. All right, so go in and get out on this touch. That's one way. Second way is, if you expect that, okay, this is gonna break out, then hold it. If you wanna expect that. Now, when I expect that this is gonna be a breakout, when I see some kind of breakout of strength, so that kind of expectation, if we see this kind of momentum, this is a strength momentum coming in. When we see this kind of momentum, or maybe this kind of momentum around here, hitting the resistance, then I can expect, then it makes sense to expect that, okay, let's take a chance for a breakout momentum, like what the chance we have taken in BPCL yesterday, on yesterday's trade. On yesterday's trade in BPCL, it was damn bullish from here. The corrective swing was so strong while hitting the resistance. That's the reason actually we were holding it. Similar case for that gain, I think last week we made 8 times. Similar trade. So that's a very much advanced level of trading, where you are trading you are trading against the overall trend, analyzing the lower time frames order flows. If you can do that, brilliant. But I need to see something for that, right? What is happening here, what is good here is that holding the last higher low. But it's not really holding the last higher low, I should be saying, because holding last higher low should be said in here. No, sorry, not there. Here. This is the kind of hold we talk about. Low, breakdown, false break, and then responding back up there. And boom. This is the kind of a structure generally we talk about hold. We are not seeing that kind of a structure as well. But no, I mean, you can clear it out. I mean, these queries are very important. It should be coming to get your mind clear. But see, the trades we do is based on probabilities, right? So there is no perfect trade. So people, I see they give you tips and they say premium tips in some the advisory services, premium advisory services. I mean, you can buy their regular advisory services, regular tips, or premium tips. So I really don't understand what do you mean by premium, because whenever you open a trade, every trade is a premium or regular for you. So there is no trade special for you really. Every trade fulfills some of the criterias and why you are opening that trade. There is nothing that, okay, this is more special trade and this is less special trade. If you're thinking that way, or if you're choosing trade that way, it means you don't have a trading plan, right? So thinking that, okay, let's catch up a breakout momentum before it happens, which is not bad, because even I'm doing that. So that's brilliant, because a lot of times on the breakout momentum, you don't get a chance. and that's a core skill actually. I mean, when you can develop that skill, when you can catch up the move before it really happens from on zero level, that's very much core skill. You should be looking for it. But again, as I told you, I mean, you should be seeing some kind of order flows happening over there. I mean, it should make sense. I mean, another way to do this is, okay, if I lose money in this breakout momentum, how much I lose? 1 hour, you know. And if this breakout really breaks out, then it will be huge gain, 5 to 6 hour. That's okay. So even I follow these formulas a lot of times when I'm really countering a major trend using a 1 minute or 3 minute lower time frames order flow momentums. But there should be some price action logic as well. This is I mean, this concept that, okay, जाने का कितना है, 1 hour. I mean, if there's a loss, it's a loss of 5,000. If it's 1 hour, is 5,000. And if I'm making 4 times op-ed, then it is 20,000. So why not take a chance? That's okay in that point. But there should be some price action logic supporting that concept, because that's a money management part, right? So if you're opening trade based on this, then every trade should be open based on this. But if we are price action traders, then the price action, see, because in a 1 minute time frame, we have huge momentums, which has the ability to go through, penetrate this resistance, this breakout, you know, that leads me to this trade. This idea should be there. It should not be only this 1 hour kind of ideas, because every trade has a every trade is open based on probabilities. And when we are fighting a higher time frame order flow structure, you have more chances to fail actually, because the higher time frame order flow structure is always superior. You don't chase them, you go with them, right? But when you chase them, there are reasons why we chase them sometimes. Now, if you have the reason, if you can clarify yourself that reason, then this concept ki chalo zyada se zyada kya hoga? I mean, everything is in line. I have a reason to go in. I have everything in line with the order flows and everything. And if it doesn't work out finally, now this is a confidence booster. If my thing goes wrong, then what will be the loss? 1 hour. But I see if the order flow, what I'm tracking in 1 minute time frames, if it breaks out and if the market is in line with the order flow, then there are either after the breakout, you won't get a chance to get in, or there will be a loss of -1 hour at the max. Okay. Oh, so many lines. Is it still valid? No, definitely no. See, I'm really getting confused with the lines. So let me just give you my view on this, so you can do the corrections. Now, I see a non-volatile momentum over here. Price going up, holding it. Price going up, holding it. And then even this is non-volatile because next day price gap up, and there was a sell of a strength, but it absorbed the buyers absorbed it. So this is not volatility actually. Gap up, that shows non-volatile. The price obviously seems to be closed on the day's high, and then these should be profit taking because a lot of people are in long in here, and since you have a gap up, so there should be sell off coming in, which is natural. And then this buying strength coming back from the last higher low exactly give you more strength. So actually, if you are following this non-volatile momentum, then this is a great idea to buy. A lot of people looking at this are a hanging man pin bar, right? Pin bar agar as upar banta hai to hanging man bolte those guys. And this is an engulfing pair. If you see, these are the wrong concepts basically, because there are times when you're supposed to react based on those formations, but this is not the time to react on those formations. This is a market structure where every sell-off is your buying opportunity, every sell-off. So if here you are saying that okay, are yahan pe engulfing bar hai, so reversal bar hai, at the top of, if you see reversal bar फिर sell off karo, that's a wrong way to look at this, right? And then again hanging man, chalo sell off karo, this trend is over. That's a wrong way to look at this. Even this is a buy. This is where you're supposed to buy, because you have in a non-volatile market, every opportunity of sell off is a buying opportunity for you. And so this is a flip layer, right? So you should be going long in this candle. You should be long. Then here, next day, you should be long, right? And then it goes up, and then holding it. Here you should be long again. Here you should be long again, and here you hit the stop loss with your trade. And then you see these volatilities at coming in inside the market, this low. So now it's getting volatile because now it's taking more time to reach the resistance, more time to break out, more time to coming in, and also you have a lower low, push back in, goes back up, it falls from where you see the flip resistance, it's responding back to the resistance now. So now things are not in a momentum, the kind of momentum we have been trading so far here. All right. So just let me know which time frame it is, please. Now, and then we got this volatility. Now the picture is changing. Now it's like, okay, zoop, 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 zoop. We are now marching. Now you're not going to go long like how we have been going long in non-volatile momentum. Now it's a volatility part of the market, so we should be looking for deeper pullbacks. And then here we got this support, low high, lower high, lower high. Still a volatile market here. So the similar concept you apply since we see volatility inside this. Now, if you're going to trade this, then we are looking for a breakout momentum, and then you see the kind of pushbacks happening. You're looking for a deeper pushbacks. Again, you're looking for a deeper pushbacks to go short. You're looking for deeper pushbacks to go short, not trading the breakdown of this. Is it still valid? No, it's not valid because this is a major swing, last lower high. So we are going above this. So this is out of the trend now, obviously. And it tested the top range actually. So this becomes kind of market has fallen from here to here and gone up from here to here. So kind of a double top, right? So now this is not a time to trade in this time frame anymore as such, because now we got bigger swings. Now this is the structure is 1, 2, 3, 4, 5, 6, 7, 8. This becomes what? Flattish structure. So now shift to a higher time frames for a clear picture now. Now, since this is the situation, then this is a key support, There should not be any trade in between. You wait for the market to come down over here. Here you should be looking for buy signals. But again, you should not be going for the buy trade over here. Looking at the kind of strength coming in when it's attacking the support area, you see the selling strength. This is a non-volatile structure, you see. Look at the difference. How the price traveled from here to here and how price traveling from here to here. This is a volatile structure, how the price is traveling. It means there are buyers coming in, as well as with sellers. But here, do you see buyers at all? We don't see. It's a one-way sell-off. Non-volatile structure sell-off. So we don't buy in such kind of structures. Right? So when we see such kind of a structure started, now you go down to lower time frames to attack this structure with a non-volatile momentum till the time the price is reaching the support layer. It reached the support layer, stop trading. Because now you're a part of the whole overall structure. All right. And then false breakdown of this support. Price again come back inside this channel. Now, if the price would have taken support from here, then that could be a reversal move. Looks like it has taken that support actually the false break. Definitely you're making as well as low, higher low, and similar top, right? So if there's a pushback to this support layer, if you're going long, that's okay. You're trading now volatility. Remember this. What do you see here? Sorry. What do you see here? One, retracement. Retracement is very much deep. Again a pushback, double top, we don't know yet. On Monday we'll see. So that's a higher low, but it's a pretty volatile higher low. So this arrow, yeah, it's a buy. If it comes here, it's a good buy in terms of trading volatility. For a breakout momentum, track the lower time frames. In lower time frames, if we have, check out this momentum, how this momentum is. If this momentum has the strength, look for breakout trade. But the you need to remember is most of after around 60 to 70% of the breakout trade, it always comes back for a pushback. So even if you're following 5-minute time frames to track down a breakout momentum here, then don't expect this one as a target, because there's only 20 to 30% time only that thing happens. Anyhow, we'll be trading our stop losses in those time frames. So in case it goes over there as well, we can catch it up. So we don't need to worry about that. But when you open the trade, your mindset should be, okay, I'm ready to exit the trade anywhere in between. Anywhere in between, hopefully any key level coming in, maybe these layers, somewhere these layers, you know, and you have drawn this line right. So yeah, breakout, pullback. If it's pulling back to here, then I won't suggest you to go ahead for a buy, looking at the volatility. So if you're buying a pullback, then we will buy it in a deeper pullback. So where is the deeper pullback? Figure out some layer, like here we have some layer. So this is a good layer, and your trend line is also coming there, nice one. So why not go ahead here for a pullback trade? Yep. So this is my view. What are you saying? Is it still valid? Okay, this answer, can this be considered as non-broad rounding? Yes, very good. And assumed false break. No, it should not be assuming false break. We don't know yet. We don't know yet. And it's the important thing is, see, it's sustaining inside the range. We have the range. Now the market is back into the range. So there is a good probability it's going up. And it took support over here. So why not? It's holding that support layer. That's a very good sign for a reversal. So I think this should not be the assumption. Yeah. Gokul. Yeah. So that's it. From here, I think a few charts I can discuss with you also. This is a very good thing. I mean, with your charts only, I've covered the topic actually I plan to discuss. So a few charts I prepared actually, but in you guys' charts we already discussed that. So these are non-volatile, and there's this volatility. Now when you have this volatility, then breaking. Similar situation, the chart we discussed in BART. So if we are supposed to open trade in here, then we should be opening this in pullbacks, and also good chances for counter trend trade as well. So hits the resistance, try to go short, resistance, try to go short, resistance, try to go short. You see, every time you are shorting on the resistances. So we are not just, see, we are not shorting based on any candle formations or something. We are shorting based on the order flow structure. Using the candle formations, if you want, that's an additional part on that area. That's it. But this structure is very much important. If you apply those shorting tools in a wrong structure, it will kill you in there. So for an example, I mean, if we are in here, I mean, we just have say, this much price action, and now we had a breakout, and we are not trading this breakout because of the volatility. So you're looking for a higher pullback to go to get into this one, higher low, higher low, higher low. So where is the next possible buy entry opportunity you can get? You can see the order flows happening where? Here, right? A lot of resistances, order flows go in. So that's the level you'll go in and have a target up here, exit. And similarly, find out the key level around this layer. Do you have anything there? You not necessarily every time you'll be getting it, right? So I don't see really something there. Around this layer, do you have something? No, I don't see anything over there. So this will happen. A lot of times you won't get it. But again, that thing can be also tracked down. using the lower time frames. Because if you see, when this thing happened, the last move happens, and then we are waiting for a deeper pushback, and we are waiting for to get into this for the next trade towards upside. Now, if you don't have a key level, why not tracking the order flows? You see the price comes here, we made a double bottom, we made a triple bottom, and we made a retest. You see how many times we tested that one level. So if you're following a 5 or 15-minute time frames, and if you're saying that, okay, this level is being tested, so why not go in? Even though you don't have a key layer, but you're just reading the order flows in a lower time frames. And sometimes maybe you can get a channel as well. In this area, you may get a channel in 1 minute time frames, and there's a channel breakout. Or sometimes the non-volatile momentum. So you'll have to explore these things. Go in and you'll have to explore these things, but that's level 2. Your first try should be finding out the key level and get into those areas. That should be your first job. And once you master that one, then you go for the master this next one. Okay, if you don't have a key layer, just by reading the product flows, can I go in on a pullback? Do we see something like that? Right? So for me, if I'm tracking this, I don't know what happened inside this. Then the next key layer should be this one. But before this, I can see, okay, at least these layers are coming in. So since the price reacted over here, so around this layer, maybe this layer is too much down, then maybe a bit higher, we can go for a long entry in terms of the key level. But before it reaches the key level, if we see, okay, some order flows are happening over there, a lot of shadows, push back up, then you can go in. One more interesting part, that is, now let's say we really have a key level over here, and we are waiting for the market to buy over here. But right before we go and buy over here in the same time frame. Why I'm saying same time frame? Because this is very important, because in lower time frames, if you okay, I'll come to that point later. First, let me clear this one. We have a key layer. We are waiting for the market to come here, and we'll go in this pushback. But right before hitting the pushback, when we see, okay, there is a formations of a very much a strong key support layer, isn't it? For quite a long time. It's a 240 minutes chart. You can understand it's a couple of days of low, right? So if I see the price is breaking down below this and coming to my support, am I going to buy it? For me, no. No. Because if the buying has its own strength and it's trying its level best to go up from these areas, why this layer is failing? If this is happening, the similar situation is happening around here at very higher level, and then coming in back, that I can understand. But around my support area where I'm going to buy it back, I don't want to see there is a support failure. There is a buyer's failure happening around that layer. So that's another important point. Now, how you understand these layers? Definitely when you start trading, the order flows, then day by day you will be getting these experiences. So maybe you're waiting today, you're waiting for the market to buy it here, and then it doesn't work out, and then you do for the research that what really could be my mistake. There could not be your mistake as well, but still you need to go through your charts to check out actually if something is wrong from your side. Then you can track down these mistakes, and then you can improve yourself for the next trade, right? But again, this is level 3. Sorry, this should be level 2 for me, and the other one should be level 3. So level 1 should be find out key level and get in a volatile structure on the deeper pushback. Second level should be when it doesn't work out, or even if it's working out, track the variations, because there are different ways you'll be tracking the key layers. There are different ways you'll be seeing the corrective swings happening. So track those key layers and corrective swings, how it's really happening. Get some charts and stuff with you. Do some experiment on that. Explore those patterns. And third level is the one we talked about. If there is not a key level, then how can we go in on a deeper pushback? Just by reading the order flows. Fourth level is your filtrations. What is your filtrations? There is a key level. You want to go in. At the same time, you want to check out order flows over there for a better confirmations. I don't mean to check out order flow is looking for a pin bar or an engulfing bar. No. Order flow formations is this one. how the price is reacting to that layer in 1, 3, 5, reading the order flows over there, showing you the strength of the buying side. It's all about strength, what you read in the market, nothing else. It now the strength can come in a shape of pin bar, in a shape of engulfing bar, in a shape of some other bar, whatever it is, in a shape of channel breakout, however it is. All right. Yeah, I'm done. So a lot of things I talked about today. Hopefully you got the points, and once you go through the video again, hopefully you'll understand better. And from next week onwards, I'll try to share some of the charts on the volatility. Yeah, and that Tata Steel trade should be helping you. Since you're talking about this, let me just share Tata Steel. So Tata Steel, the broader picture was this weekly formations actually. So you see in the weekly formations, we have deeper pushbacks. Similar thing, what I just talked now. So now if someone is going to short this Tata Steel, where he should short it? Base level to go short. Go short. You see how many momentum you got? How much momentum? From 640, your first target, 506, 140 points. Now, in weekly time frame, this is downtrend. So again, if I want to short it, should I short it here just because you have key support? No, because of the order flow structure. We should be targeting at a higher level. Now, where is the higher level, do you think? Can you send me one chart so I can understand actually got the point what I am talking about? Can each of you send me one chart? Where should be my short entry in Tata Steel? I want to trade this volatility. Not based on trend line or anything, based on key level, you'll have to send me where I should be short. In hourly chart or in a 5-minute time frame, if I show you, this is super strength. You see, zip, 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 zip. Super strength is coming in. But in weekly, the thing is entirely different. So we'll have to trade with both the mindset, both the time frame mindset. That okay, we are if we're trading 5-minute time frames, we'll have to keep in mind weekly is bearish. That could be reversal, and we can see some kind of reversal is coming in. There are some signs. We'll talk about that. Sending me or no? I'm giving you 5 minutes. I'm giving you 2 minutes. Just take a screenshot of that Tata Steel weekly chart, or I'll give you my screen. From here, you can take the screenshot. Send it to me. You can take the screenshot directly from here and send it to me. I want to trade this pushback, pullback, where I should be short, not based on trend line, based on key level. I did a mistake. I should not be showing you this thing. That's a mistake. I should have given this chart to you like this. So you can't see what is that. Oh, what? You're doing it or no? You're not doing it? Let me know, then I'll continue. Okay. Gokul. Chandan. 1 more minute. Okay. Um, I don't find that one as such key level because yeah, yeah, right. So once it goes through this, then I see this one. This layer has a lot of order flows. Find as a key resistance and support. Try to find the areas where you see most of the order flows. Most of the order flows, you just have one pushback from there, right? So this will become a part of actually this range. So that's a zone. So if this one, I mean, instead of targeting this one, since this zone is nearby, so I would like to short it here only, or my stop loss. Even if I'm shorting here, I would like to put my stop loss above this range because I see most of the order flows here, isn't it? The sellers, most of the sellers are coming in on this layer only. Now, even this was a sell here, but it couldn't reach, and that is the reason a lot of times you see my lot of orders are right before hitting the layer. In case of non-volatile, in case of trading the non-volatility, because I always have fear that okay, it will turn before the key level, because most of the time, a lot of times it happened with me. I missed a lot of good moves because of just I'm waiting for that exact key layer, and that's the reason I just enter the trade of a few points before it hits the key layer, so that I don't, I can become a part of that trade in any way. So this is the layer actually we should be going for the first chance, and this is the second chance. Okay, so how it works? Okay, all right. All right. So when we are going short here, then definitely this is a weekly chart. So what is our expectation? We are coming back down with the first target of this. This trend will continue, this one. At the same time, coming in lower time frames, we see we have good support range over here in these areas. So you'll have to keep that in mind as well. So if you're shorting here, then this should be your first target. See, we have the weekly target that's in that place, but at the same time, you'll have to keep trailing your stop losses. And not necessarily you are tracking weekly time frame. That means you are a weekly time frame long-term trader. No, even if we are a daily time frame trader, where we are going to open a trade maybe for 2-3 days or short moves, still that weekly chart will follow, because in terms of daily or 4-hour time frames, this is a short on this reversal on this trade with a target of first target of this. Second target comes around, you see these areas. Here you have the next order flows, and then the weekly final target in here. At the same time, order flows around here is also important. You're seeing a lot of order flows coming in, right? So you hit the support and damn, push back up. Next day, gap up and pushing back up, but still you're a part of this resistance. Now, what is important is weekly, we have this key layer of resistance. Now, even as a short-term trader, 60-minute time frames, this is a very important resistance layer for us. And if we see the price is approaching this resistance. So far, it's non-volatile, moved up, holding strength, moved up, holding strength. We'll see what happens here. We will get in, maybe a pre-breakout or maybe after breakout. But this is a very key layer of resistance for us, since we have seen the daily and weekly time frame charts. Because now, to get the targets, if we are going above this, we are not seeing much resistances before it hits around these layers. So we have a free flow of this momentum. All right. And why a reversal we are seeing some kind of order flows? Because of the way the non-volatile structure is playing out over here. See, in terms of the weekly time frames, it goes up, it's holding the layer, goes up. First time we see, since 2019, actually, in last 4 months, you see the buying strength coming in over here. And for the first time, we see the sell-off strength coming in, and then it's a pushback up. So from here, we can see there are a lot of long-term players. They are actually waiting for the buy move on these layers. And at the same time, this is a layer of the last lower low as well, around that layer. So it's sustaining above the last lower low, which is one of the sign of reversal. But still, things are not confirmed, or things are not like, we are not saying the trend is over till the time we are not breaking through this. We are not going above this. This will be the deciding factor, because these are sellers heaven, this area. So as a counter trend trader of this trend, let's say we are riding this trend as a with trend trader, as a with trend trading style, with the non-volatility and whatever it is. And when we reach here, can we go short? Yes. Can I look for a counter trend trade? Yes. Because this is a very much a strong selling area for the weekly. It is a weekly resistance, so you need to understand that. Weekly resistance is very important. Weekly resistance are very much long-term resistances for multiple years. The price have been reacting to that. Entire 2018, this layer was being respected. Entire 2018. Last time it was not able to even reach there. Sell-off started. So why not taking a chance in here? Right. So we'll have to be flexible this way. We are riding the trend in shorter time frames. At the same time, in a higher time frames, we are going for short there as well. In a lower time frames, we know where it should be our target. Even if we are long in here, we are not going to trade a pre-breakout as well in these areas, because it's a 100% selling strength for now. So the view will change, obviously, looking at how the price is approaching. But even the approach of the price is very good. Still, you should not be looking for selling strength over here. Sorry, pre-breakout or breakout strength over here till the time we are not clearing this picture around this layer. And the most important point is, you don't see the price is actually waiting on that level, or it's going flat on that level, or every time price goes there, boom, boom, boom. It doesn't take time. Boom, boom. So why I'm explaining you this way, this area, just to explain you the counter trend trade, where you should be looking for the solid counter trend trade, like these areas, where it's very much strong from the very higher time frames, very higher time frames. And remember this thing: when it's a non-volatile momentum, it means it's full of buyers. So if any FII or any big player want to play the game here, he want to really go short with a huge amount, then this momentum is a heaven for him, because it's full of buying momentums coming in. So full of buy orders. So he can execute any number of shares for sell orders. So there can be a false break. There can be a major false break, because generally the traders, the big players, they don't get such amount of bulk traders in one particular areas. So, and when they get it and they want to play with them, it's they don't leave it, basically, those chances. So looking at the order flows over here, you should be going for a sell order entries over here, and obviously your stop loss will have to be a huge stop loss. It should not be a very narrow stop loss. You will be out of this in that case. So expect a huge stop loss, and in such kind of scenarios, you can expect the kind of momentum. It's a big momentum basically if you get it. So we can try different. We can try even two trades. One trade maybe regular trade. Go for short here, stop loss a regular false break stop loss. Second is wait for a false break happening here. Look at the order flows. It goes a little be a breakout. Let us see how it works out over here. And the moment you feel like, okay, it's gonna fail it, the breakout is a failed breakout, going back again. Stop loss above the high, few points above the high. So the motive should be when the price reaches here, your full intention should be how to get into a short here. Because it's not about how to, if it works out a buy here, how far it can go, because there are obstacles actually right after the breakout. It's not you don't expect a very long way above there. But the sell-off will have better strength in these areas. So you see in these areas, two different views we are talking about. In a very short term, we are very much bullish. We look for a buy entries and all. Even you're looking for a breakouts and all. But in a longer picture, we are ready to short it at the same time. And this trade, not only if you are a long-term trader, you'll have to go it. Even for an intraday trader, there is a move. The day price reaches here, even an intraday trader can make money shorting this. Maybe he won't be making this much length, but a good amount of move should be expected on there. Okay, so I'll see you guys on the next session and in the market hours. Right? Anything you want to ask? Yeah. Thank you also. Gokul, Chandan, thank you so much. But thank you so much. I'll see you guys then. Thanks.